Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday. It is the 15th of June 2018. Let's take a look at these markets. We were mainly, I guess, mixed actually. The S&P 500 actually gained some ground if you don't count the dividend that it was paid today. So it paid a $1.25 dividend, which shows us down a $1.53 on the day, when in fact we were only down 28 cents. So that changes the numbers. But the Nasdaq gained some ground this week, as did the Russell 2000. The Dow lost a little, and the biggest loser was really oil and the financials. And last week I had said maybe that the oil could lead the market higher, the XLE, but of course that failed and failed miserably. From failed moves come fast moves. Let's take a look at the charts here. We're going to look at the SPX and instead of the SPY. The SPY, of course, shows that dividend where and that gap down, which really goes back to the holders of the SPY and forms that dividend. So looking at the S&P 500 on a cash basis instead, you can see we are below the 5-day moving average. That just means a little bit of sideways action for now. We're just digesting these recent gains that we've had. We're still above a rising 20 and 50-day moving average. We're above a 100, 150, and 200. And to pull back down towards this prior resistance wouldn't be a horrible thing for this market. So heading into next week, it simply means that we want to be a little bit cautious as far as new purchases until we can get back up above probably about 2790-ish. And the best way for it to get above there would be for it to rally up, pull back and make a higher low, and then pull back down towards maybe the 5-day moving average, and then to break higher from there. So let's take a look at the Nasdaq, because we can make more sense of that without its dividend being paid. And of course, this is in a better uptrend. We are still above the rising 5-day moving average in this prior little band of resistance over here. So this resistance acted as support earlier in the week, and next week I would expect that that's going to be an important level as well. If we break down, and of course, when we have a market in an uptrend, we consider it innocent till proven guilty. But if we break down, I would expect that it would occur something like this, where it breaks down, bounces off that support, gets trapped underneath the 5-day moving average, and then perhaps sees a little bit more uh, uh, vigor to some profit taking. But again, we are in a great uptrend here on a weekly basis. We closed at an all-time high, and we're only one day off of the all-time closing high, which was, of course, yesterday. The Russell 2000 is in a very strong position as well. It's correcting more through time than price here, holding up really at these all-time highs within a couple pennies, really. And we were looking at, if the market did pull back, that our first level of significance that we were going to look at was the Fibonacci pullback down towards this level, and which occurred at this gap as well. Obviously, there is no pullback so far, so what we want to see continue next week is that if this 166 and a quarter to 166 and a half continues to hold, it's considered innocent till proven guilty, no reason to sell short. If, however, it breaks down, does kind of the same thing, rallies up to maybe that 5-day moving average, which flattens out and declines, then perhaps that would pave the way for a little bit deeper pullback, maybe to the 20-day moving average. But again, it's innocent until proven guilty. There's no point in shorting until you have actual evidence. We want to anticipate all potential scenarios, but wait for price confirmation before we put our money at risk. And it's definitely more at risk in a short trade when the market is higher. Semiconductors are still holding up well. They hold these gains very nicely. They are really kind of neutral here this week. They did hold above this key level, 108 and a half really is what we want to see hold next week. So if they can continue to turn sideways and build energy, I think that's a positive. The financials, however, they're back below the volume weighted average price from Italy. Not that that's a big deal necessarily, but it did get this market to get some bigger volume and momentum into it at that point. It seemed like it was going to hold above it as of Thursday, but today we broke back down, and we are below a declining 5-day moving average, telling us that there's no reason to be a buyer in here right now. over to the daily time frame, we're still in this bigger range that we've been talking about, 2650 to 2850, and we're now down again to the 200-day moving average. I was hoping that we would maybe rally today. In Thursday's video, I was saying it would be best if we rallied up and maybe held the 50-day, and then we're to be able to break higher. That scenario is obviously not going to happen, and realistically, there's just no point in doing anything with these financials while they're in this range. The surprise to me was the XLE, the energy, and that's what your trading plan is about, is understanding the potential scenarios and then understanding when those scenarios are broken. So we failed in here, and now the momentum on the intermediate term trend is lower. We've been below the declining 5-day moving average for the last 3 days, including today. So this is not a time to be involved. If you get, let's say, bought this breakout, as I told subscribers, we don't buy that breakout after it's been a little extended. We look for it to pull back and then buy strength at this point with a stop under here. Not to split hairs, it doesn't matter, because once they break down below that decline, that 5-day moving average, and the 5-day moving average starts declining, it's really no point in being involved in the trade from a swing trade perspective, and that allowed us to sidestep this gap lower today, which it was obviously pretty fortunate. Let's talk about the cryptos for a moment. Last week we spoke about Bitcoin. I haven't spoken about these in a while, but I was talking about Bitcoin and this bearish flag, that if it broke down, it looked like it would resume the downtrend. And here we are still in a downtrend. We have a pattern of lower highs and lower lows. I don't see any reason in here to be a buyer of Bitcoin. And the same is true for Ethereum. Ethereum broke its bearish flag over here at about 580, and that's where it dropped a quick $100 plus from there. So we still have a pattern of lower highs and lower lows. I don't see any reason to be a buyer of these cryptos. If you're looking to be a buyer, be patient, wait. There's, again, no reason to be involved next week. I think it would be nice to see if these markets would just continue to digest these gains a little bit. We've had a big run, and we've had some really kind of crazy high momentum moves in stocks that are indicating a little bit too much speculation. Stocks like IQ and Hua, we traded this Sogo in Alpha Trends and still have a little bit left over. But there's a lot of reasons to think that maybe it's just going to start to slow down a little bit. But overall, we're still in a primary uptrend in these markets.